Okay, folks. Folks, good morning and welcome to Swing Trading Today. This is Bob Desmond and it is 6:47 in the a.m. Eastern Standard Time, March the 25th. Okay, so we're going to talk about today economic data coming out. We also are going to go to the pre-market futures, and I'll give you a synopsis of where I think the market's heading from here. What else? I don't have any stock chart requests to go over this morning from members. We went over a whole bunch of them yesterday on the members only live stream. We went over a lot of retailers and the semiconductor sector, but you saw weakness in the SOXL. However, you saw the semiconductor manufacturers doing very, very well. Does that hold up? I don't know. We discussed the correlations between the SOXL and a few names. AMAT was one of them, and the correlation is so strong that if the SOXL goes, in all probability, so will the semi-manufacturing names. So let's talk about tonight first. Tonight we're going to have Thursday night stock charts live. We go live at 6 p.m. Get notified either by entering the email address here and get my 5 most powerful candlestick patterns. That's a free video tutorial, 5-part. Or else just simply, if you're already keenly aware of your own favorite 5-part most powerful candlestick patterns, enter your email address here, get alerted 15 minutes, usually a half hour prior to us going live. And you'll get alerted, join us tonight, or simply click the bell button, wherever that is. But unfortunately, that goes off intermittently and usually after we go live. A quick note from our sponsor, which is TrendSpider, automated technical analysis. Folks, use algorithms. They've been helping to keep us out of trouble by using a rules-based approach of setting alerts. If this, then that. And over the past couple of days, I've had alerts fire off. And what they've told us is, okay, you're looking good here. However, you got to wait for either a continuation move lower or a continuation move higher before you go adding long or short. So automate your grunt work, speed up your technical analysis, improve your accuracy, and reduce costly analytical mistakes by using a rules-based approach. What is that? Well, you use the scanners, and then you use alerts to help time the trades that you like on the scanners. Explore the product, go over here, 7-day free trial offer, use the demo, TrendSpider University. These guys are very hands-on with providing guidance. Jake, Dan, and team, and they continue to grow over there. So I don't even know all the guys now, but I used to. Now they're getting so big. So there's a whole bunch of support to help you out. And if you need me to intervene, I know the owners there and the top management, and I can get them involved with you. And it's free to our silver and gold level memberships. Let's get to the economic data set to be released today. Today being Thursday, there's an expectation of 735,000 initial jobless claims. This is per week, folks. Think about this. Every single week for months now, in excess of 700,000 initial jobs. It's horrible. Simply horrible. Your heart has to go out. Now, last week we had a big surge. I don't want to see beat expectations because that glorifies it. We saw a surge in initial jobless claims. Absolutely horrendous. Yesterday, we had durable goods orders. They didn't just miss. They collapsed. Yet you had all the talking heads, Barkin, Powell, Yellen talking about how tax hikes are going to be great. You're going to pay more taxes and you're going to love it. It's going to be great for you. Mary Daly, another Fed head, John Williams, everything's great. The second half is going to be amazing. 4.5% growth, but we haven't had 4.5% growth in over 10 years. Yet, we're losing 700,000 jobs per week. Durable goods orders are crashing, yet we're going to have 4.5% growth. Amazing. So get ready, 8:30 Eastern Standard Time, jobless claims. Then we have the GDP. I believe that this is the final revision to Q4. Watch how they ratchet this one up. Oh, the tailwinds that we saw. They're expecting a 4.1% GDP growth for Q4. And then we have all these Fed heads coming out throughout the day. Again, Mary Daly. She must be the most interesting person in the world. 2 days in a row. Charles Evans, another day of hearing him. Why do these people have to keep coming out and reinforcing this great data that we're getting? It's because it's nonsense. It's nonsense. And that's why we remain short of the market. We added short more to the triple Qs the day before yesterday, paid off yesterday. So let's go to the pre-market activity. First, before I start chatting, I need to say good morning to people. JW, good morning. Big Bear, top of the morning to you. Okay, let's go to Buster Stacks. Good for you, Buster Stacks. Is there a learning curve for you? And have you tried their technical support? They're really, really good if you have a question. Because believe me, I had questions when I was learning. And Jake in particular, he's now a big shot over there. So I don't think he's more as hands-on. But Jake in particular was really, really good. Held my hand. Okay, let's begin with JW. I don't like the Russell 2000. We're short of the Russell 2000. I think we're going to break to new lower lows. I heard a guy named Meet Kevin who's on YouTube. He's more of a real estate guy, but he's talking about, I want to talk about this for a moment. And don't get me wrong, I'm not knocking the guy. He's very successful. But when I hear things that seem out of the ordinary, I need to address them. So RTY, that's basically the Russell 2000. I'm just going to bring up the IWM. Now, what he was saying, he's got a lot of followers, and I get worried sometimes. What he's saying is that he's seeing a W formation, whether he's looking at the chart or whether he's listening to somebody, I don't know. This is not a W formation. And then he's talking about how we're going to go into a V-shaped rally. You know what? Let me go to the current saved chart. iShares. And I believe, JW, you're talking about the pre-market activity. Oh, good. Buster Stacks. Yeah, they have very good tutorials. Yep. Good. I'm glad you're using them. iShares. Where are they? Come on, man. I have my saved charts, which helped me out quite a bit. Here we go. All right. So what he's saying, Meet Kevin on YouTube, is that this appears to be setting up for a W formation. I don't think it is. I think that we are breaking. We're going to break the support level. Look at your Stokes. Normally, your W formations, you're not going to see them when you have Stokes trading down below 50. It's not impossible because we're going to open up today with Stokes down below 50. We're going to rally at the open, unless, of course, the jobs data is either extremely good or extremely bad. Extremely good is good economic data, which means yields head up higher. Stocks aren't going to like that. Extremely bad is not really good for the economy. However, the markets may price in lower yields, and that's good for stocks. So as obscene as it is, that's the reality of the stock market. Now, I don't think that this is going to hold. I think ultimately for a bounce, a real strong bounce, we're coming down here to 190. That's my first price target. And then I think that we're coming down here. I think that we're giving up all of the post-election gains because you have to ask yourself, why the heck did we have this rally? We have more debt than we could possibly handle. We have tax hikes coming down, not tax cuts, tax hikes coming down the pike. We have inflation. And you have the Federal Reserve admitting they're going to let it run hot. They're not going to fight it. So I need to be educated once again. When I see the stock market, we're talking about the IWM, so we'll go to a monthly chart. God damn it. My mouse just gets jittery. Monthly chart. We remain. Never before in history has the small caps been this far extended beyond its 48 period moving average. Never, ever. And well above its 2 standard deviation Bollinger Band, kissing the 3 standard still, even after this minor sell-off, still it's extended. So I'm supposed to believe that the reversion to the mean, we're going to get a W formation here? I don't think so. I think we're breaking, and we're going to break pretty hard. It may not be this week. We may get a counter trend move, but the path of least resistance is now to the downside. You have IWM puts. You're good. As long as you're not... the only thing I worry about when I hear people buying puts is that they're at the money or just out of the money because they're cheap. You know, you get a counter trend rally and it just evaporates the value of those puts quickly. So I like, at a minimum, if I'm going to buy options, I like to go 45 days out because once you get into that front month period, that 30-day remaining on those options, that's when time decay really kicks in. And you don't have time to be wrong. You have to be right spot on with your calls. Pardon the pun. All right, back to the futures action. The Russell 2000 is giving up gains here this morning. We were up higher. And what I want to point out, is this a chart I want? I don't think it is. I don't see my annotations here. There's a few contracts trading out there. The hell with it. We use this. God damn it. So here's what you get. We saw the same setup here, right? We dead cat bounced. I drew these trend lines. We broke the support level. Look at what we're doing again. We get oversold relative to the 3rd standard deviation Bollinger Band, and we move up higher. We drift up higher. This is not buying the dip. And in the close these past several days, we have seen big volume into the close, selling into the close, not buying. That's truly buying the dip, bidding shares off the lows of the session and that final hour of trade. And the final hour of trade is by far the most important hour of the day. In a market environment like this, I would argue the final 5 minutes are the most important minutes of the day. So we are breaking on a 30-minute time frame, 15-minute time frame, whatever. We have now broken this dead cat bounce, and now we were up about 0.75 of a percentage point earlier overnight, and now we are breaking this band of support, or have broken. So this is in the rearview mirror. Maybe the jobless claims will come out, initial jobless claims will come out, influence the market one way or the other. I'm not quite sure. But we are fading here. And I think that the path of least resistance for the Russell 2000 remains down despite the pretty aggressive selling we've seen of late. Now, yesterday, we saw a break in the S&P 500. We have drifted up. Jesus Christ. I think I need another cup of coffee. Oh, my mouse is just not working right. So we're trading in this trading range. We have a lower high. Again, 30-minute chart, very volatile. But I think that ultimately what we're going to do is we're going to break this lower band of support. So it's going to be interesting to see. Good morning, Roy. Pete, good morning. To see how we close out the day today. And we'll go over the weekly charts tonight. Again, 6 p.m. Eastern Standard Time on Thursday night Stock Charts Live. But I think ultimately we're going to break here and move down lower. The NASDAQ 100. Now, the problem with the NASDAQ 100 / Qs, or whatever you want to call them, is that we sold off into the close yesterday. And remember that the Qs are tech-laden. There are no energy stocks in the Qs. So you can forget about value. Anything that does well in a rising interest rate environment usually doesn't populate the triple Qs. So think about yesterday. Bonds rallied, yields pulled back. What did the Qs do? They pulled back. And I'm predicting that we're going to get another pop up higher on yields. Even they may not last. But if you have the triple Qs and the XLK, which is a technology ETF, which couldn't rally these past couple of days on declining yields, what happens if we get a pop up higher on yields? You could bet that in all probability, they're going to break. So with that being said, let's take a look at how bonds are trading this morning. Where are my bonds? There we go. Now, bonds recovered. They were down earlier. Bonds are recovered. This is a 30-minute chart. Now, we put in a lower high yesterday. Now, this is, again, a 30-minute chart, so very volatile. I'm not a day trader. But when I see this, I have to ask myself, are we beginning to put in lower highs? Maybe, maybe not. But when I do see that, I watch to see if we're going to break down to new lower lows. So if we break this support level, that means that in yellow, if we break that support level, that puts in jeopardy this very short-term rally that we've had in the 10-year Treasury note. What does that mean for yields? It means that they move up higher. And that's not going to bode well for tech. And you're seeing leadership names in tech, like Shopify yesterday. Buster Stacks, I don't know if you heard Market Wrap last night. I was talking about, I led off with you in mind and Shopify. So lower highs in RSI. RSI is validating price action here. It's weak. And that means that we may see some weakness here fairly soon. So be careful of a potential reversal on yields today. If you see a big, how do I put this? I don't want to be insensitive. If you see a very good number, meaning jobless claims came in less than what the market had expected, you may get a rise in yields. But if you see a big miss, meaning you see a large increase in initial jobless claims, you'll probably see a decline in yields. Let's take a look at the dollar, which has been strong of late. Let's pull back. I don't like 30-minute charts. 4-hour chart. This is better. Gives me a better clue of as to what we might be doing longer term. It's intraday, but still a significant chart or time frame, I should say. Now, this bar here opened up at 5 a.m. This closes at 9 a.m. So the question is, do we hold this support level? And this is not really drawn well. Hold on, let me get rid of this. That's better. Because at current, what we're doing is we're giving up what was resistance here is now being given up. But we haven't closed there. We'll see what happens at 9 a.m. So what I'm going to do is I'm just going to set an alert. And the reason why this is significant, if you're wondering why I'm focusing on the dollar, is because we have a lot of gold stocks, silver stocks. So our alert is set. Let's check out gold. Gold managed to eke out a gain yesterday, but the miners got crushed, especially into the close. So I would not go adding more. As much as I want to talk my book about what a great deal you're going to get on the gold miners, we're not there yet. I don't like the 4-hour chart of gold. I'm not loving this at all, to be honest. We're at a breaking point. I think the only salvation is going to be if the dollar does break. God damn it. Give me a break here. Okay. Thanks for bearing with me, folks. We just want to set up our day here. All right. So we're gonna either breaking out or breaking down this morning on gold. I shouldn't say this morning, today. VIX is down, no great shock. Check out Nat Gas. Nat Gas was interesting earlier in the week. It remains interesting, actually. One of our best stock charts going into the week to watch was Boyle and SLJ. I think it's SLJ. SJT? Hold on. Yeah, San Juan Basin Trust. But that collapsed. It was looking so good going into the week. Duh, Bob. I think it's interesting, Boyle. This puts you along with natural gas. It's an ultra fund, leveraged ETF. Be careful. We're not ready yet. I don't see a setup here quite yet. So we'll watch. All right, let's go to oil. They have a Chinese vessel that's stuck backing up the Suez Canal. Light sweet crude down on the session by over 1.5%. This is no joke. Big rally up and into resistance. Do we get a higher low? That's the question. Oil's under a lot of pressure here. Lower highs, lower lows. RSI is drifting up higher, which is bullish. So we'll watch it. Hey, good morning, Pete. All right. I think that's what I wanted to go over. I don't have any members requests. I have Pete's request here. Let's bring up our friends over at TrendSpider. All right, get rid of this. I just want to check out Facebook really quick. Facebook was looking good going into the new week. But no mas. Here's the value, folks, of the automated trend lines. I'm telling you. Click of a button. We ran right up and into resistance. Bearish reversal bar on the week. We have an alert set down here at around 278.09. I really question whether or not it's going to hold. Horrible. What else fired off? eBay was looking really good. That's over. That ended yesterday. A lot of damage done yesterday. I don't think people appreciate it enough. I had an alert set. So this is the value of not chasing these stocks, folks. I started out with this earlier, that we had alerts that fired off. And simply because they fire off doesn't mean we go running in, going buying or selling. We watch. We just watch the price action. So the alert was set. We set it while eBay was moving up higher. So rather than chasing the shares, we set an alert down here because this was resistance. We broke out and above it. So I said to myself, if we pull back, retest the support level, if it was resistance back here in a healthy market, it should now act as support. What happened yesterday? Not only did we retest, we failed, and we sliced right through it like a hot knife through butter, and we closed down below it. So this was a bull trap. So beware. Now take a look. This is very bullish going into the week. Now take a look at this chart. Think about the poor SOB who bought at the highs of the week at 61.03 because some talking head on the financial news media was saying, This pullback is a great opportunity. You need to buy on the dip in YOLO. Are you out of your mind? This is not a game. This is a business, man. So I'm gonna leave off with this tirade by saying it doesn't matter where a stock trades intra-period, meaning intra-week, intra-day, intra 15-minute period. If you're a day trader, what matters is where it closes. At current, if we were to close out the week right here, right now on eBay, we're going lower. This is a bearish key reversal bar and a breakout point failure, aka bull trap. So, not good. I'm going to leave off here with fold, and I will spare you guys my tirade. Amicus. Oh, we were looking at this a while ago. Yeah, you got to avoid this. I mean, the party's over here. We're trading at current at the lows of the month. If you're looking for support levels, you're looking at it at around $8.50 per share. If we break, we could easily come down to the low sevens on it. And again, I'm going to illustrate the value of the automated trend lines. So we drifted up here, pulled back, put in a higher low, right? Should you have bought that higher low? Absolutely not. Because we broke out here above resistance. We did a retest, broke down below one support level, held the other. Then you had a confirmation breakdown yesterday. So in all probability, we're going to get lower lows. This is the market sending you a signal that rallies are being sold. So let's take the signal by the market that that's what's happening here. And this is a perfect example of watching the close. Because if you take a look at this, I know it's hard to see. This raindrop chart. Let's bring up raindrop charts above. Raindrop charting is proprietary to TrendSpider. It's a mixture of volume-weighted moving average and candlestick charting. Now, the left side of the candlestick is the AM session. The right side is the PM session. When you get a big, fat, pregnant belly on the right side and the day is red, that means you saw selling into the close. And that increases the probability of lower lows. So I would wait for, at a bare minimum here, $8.50 per share, and perhaps if even lower in the low sevens if this fails to hold. So no great rush here. The trend is clearly down. And with that, folks, I'm going to say everyone have a very, very profitable trading day. If you get nothing else out of this market or out of this commentary, don't go chasing these stocks up higher. Sentiment has changed. And join us tonight at 6 p.m. Eastern Standard Time on YouTube for Thursday Night Stock Charts Live, where we review the weekly charts. How are we poised to close out the week? And that tonight is actually when we begin to think about how we are poised to position ourselves for the new trading week. So don't let these talking heads take parking space up in your head. Watch the charts. Join us tonight. Subscribe to the channel. And I'll talk to you soon. Be well.